Welcome to the Westside Investors Network, WIN, your community of investing knowledge for growth. This is the Real Estate Professionals Investing Podcast for real estate professionals by real estate professionals. This show is focused on the next step in your career, investing. Thank you for listening. And please, if you like our content, rate us on your podcast provider. Just a quick disclaimer, the views and opinions expressed in this podcast are for educational purposes only and should not be construed as an offer to buy or sell any shares or securities, make or consider any investments, or take any other action.
Welcome back to another episode of the Deal Deep Dive segment on the Westside Investors Network podcast. I'm your host, Trent Werner. In this segment, our featured guests will share their unique stories on a specific deal they've invested in. We will dive deep into finding the deal, financing the deal, writing an offer, and the due diligence. Do us a solid and smash that subscribe button, leave us a rating, and share this episode. And now, let's dive deep.
Welcome back to the Westside Investors Network podcast. I'm your host, Trent Werner. On today's Deal Deep Dive episode, we're joined by Trevor Oldham of PodcastingYou. Trevor created PodcastingYou to help people become guests on certain podcast shows. While Trevor runs this, he's also a limited partner investor in multiple different syndications. Trevor's invested in triple net lease deals, multifamily, and development self-storage opportunities. Today, we're going to talk about Trevor's development self-storage opportunity and how he underwrote the deal, vetted his sponsor, and what he expects to receive from that investment. Now let's welcome Trevor Oldham. We have Trevor Oldham on the Deal Deep Dive today with the Westside Investors Network podcast. Trevor is a limited partner investor in 4 different deals. Today, we're going to talk about a self-storage development. But before we get into that deal specifically, I definitely want to hear more about PodcastingYou and how that has correlated into you becoming a limited partner investor.
Yeah. Thanks so much. Excited to chat today.
So tell me, what is PodcastingYou for people that don't know about it?
Yeah, most certainly. So I started this company about 7 years ago. I was actually in college at that time when I started it, and sort of morphed over time. And really what we do is we help folks. I say the alternative investment space. It used to just be the real estate space, but we've expanded to oil and gas folks and different alternative investment classes. And we really work with our clients to go out there and secure them interviews so that way they can go on podcasts. So you can imagine if you want to be a podcast guest, but you aren't sure how to go on shows, that's where sort of all of our value proposition comes in. And it's been really good. I'm sure we'll touch on it later in the interview, but because of it, we worked in so many different asset classes, whether it is your multifamily or your self-storage, your mobile home park, your mortgage notes. Then you have like your CPAs, attorneys, all the way down to your whole life insurance folks. That's a big aspect of a lot of folks in real estate have whole life insurance policies and that whole thing. So I really had to learn a lot about that, because if we're presenting our clients to a podcast, I have to know like how to present them per se. So I had to learn about all these different asset classes, and that that led me to some of that real estate investing. But in a nutshell, that's really what we do and sort of our bread and butter here as a company.
And what got you into starting this business? Why did you want to start it?
So that started back in 2015, and I was actually running a podcast at that time. I had been running it for about 2 years, and it was the different company that I was running. It was with a business partner. Unfortunately, skills, and I just started freelancing my skills out that I had, and I just kept finding clients that wanted to get booked on podcasts, edit podcasts. And after about 6 months or so, I realized I really enjoy booking people on podcasts, just time and money wise. I would charge on a commission. So say, back then I would say I would book someone on a podcast, I would pay me $50 to do it. And whether it took me an hour, whether it took me 15 minutes, where if I'm charging someone an hour to edit their podcast, I would bill them $50 an hour. So just from a time standpoint, it made more sense to go in that avenue. And then did that for a year, realized I wanted to grow the team, brought on like my first team member. Year 2, started to grow the team a little more. I was like, okay, maybe we should actually have a website now. And again, bootstrapped it, developed the website on our own. And then, just expanded it from there. I mean, early on, we were working with all these different niches. I know I mentioned all the real estate niches, but back then I was happy to take on any client, whether it was a real estate investor, whether it was a health coach, a business owner. We worked with like politicians and just all these different avenues. And I was like, I'm spreading myself like way too thin here. Who would I really like to work with the most, and I always just kept coming back to folks in the real estate investment industry. I've always had an interest in investing in real estate. I went out and got my real estate license, thinking that would help me. I realized it doesn't really help me that much, but went out and got it and just always had that interest. So it just aligned perfectly with what I was looking to do.
How did you come across this deal, this self-storage deal that you invested in?
Yeah, I would say I came across this deal where I knew I wanted to invest in self storage. And there's a couple different operators out there that I had done my research on, but I found that I'm a non-accredited investor, so I can only invest in 506B deals. So it just adds a little extra hurdle to finding these different deals. And I had just was tapping into my network of investors. So I did when I don't do it as much now, but I was attending a lot of networking groups, talking to a lot of different investors. And I found over time I was talking to the same folks like once a week, and I kind of I don't know, kind of got old after about a year and a half of doing that. But it was good while it lasted, and through those connections that I made, and I still chat with those folks on occasion. But I was talking to them and just asked for a recommendation. Who would you recommend as a self storage operator? And this individual, their name kept getting brought up again and again and again. Went and looked on their site, saw they had a 506B deal, reached out to them, set up a phone conversation to know they were a previous client of ours and they were easy to work with. But that's not the reason I invested with them. I would never, I'm very conservative with my money, so I have to make sure it's a good deal, not just that it's a client or anything like that. But again, I got good recommendations from them. I like the deal that they had. They'd been in the space, I think, since 2011, so they'd been in it a decent amount of time. So I like that aspect of it. And yeah, I really liked what they had to say. And I'm sure we'll go deeper into the deal, but that's sort of how I came to find out about them, is that they just came in through a referral. I had some of that prior connection from them being my client, and then just reached out to them and said, "Hey, do you guys have any deals coming up?" And then, sure enough, they had one, because obviously I invested in it. But that's, in a nutshell, that's how it kind of worked. It was just a lot of networking to get to that point.
Yeah, and kind of to your point, where when you're a non-accredited investor, you're the one that's actually having to go find investment opportunities versus, the other side, where people can market them, and the opportunities get more brought to you. And I think you networking and telling people and sharing that you are looking for something like this definitely helps, because the referral was there. And so I get networking events can get tedious and repetitive, but it seemed to work for you, at the time when you invested in this deal.
Oh yeah, most certainly. It was like the best thing I did when I was just starting off as an LP, because I was just trying to meet as many operators as I could, learn as much as I could. So it was super beneficial back then.
So what goes into, from a limited partner investor side, what goes into your, I guess, what's your first step? You get an opportunity that you're able to look at. You've talked with the sponsor. What's your first step in deciding whether or not you want to pursue investing in that deal?
Yeah, so like you mentioned, the first step is I'll have a conversation with them and just chat with them. How have your prior deals done? Do you have any references? Just simple things like that. If I like what they have to say, and then I'll keep them on my radar, because sometimes I'm still trying to talk to operators and sponsors probably about once a week, once every other week, just to keep in touch with them. And not everyone has a deal that's going to be going out. So it is nice to just talk to someone and figure out, yeah, I want to invest with this person, get on their list. And obviously, let's say a couple months from now, if I have the money and I'm looking to invest with them, then I reach back out to them. But
And now here's a word from our sponsor.
Get things done while you're on the move. Learn more about working with a virtual assistant through Offsite Professionals. It's a great way to get all the things done that you need to get done. Have freedom in your time and streamline your life by automating your business. Stop spending time on the tasks that you can delegate and start spending more time on your superpower. Call us today at 503-446-3177 or visit our website at offsiteprofessionals.com.
Uptown Syndication is now offering a syndication coaching program for you to take your real estate portfolio to the next level. This is your opportunity to have experienced syndicators, AJ and Chris Shepard, coach you on your way to controlling your real estate investing future. Our coaching program will provide you with the tools and framework needed to begin syndicating real estate in your target market. Go to uptownsyndication.com today to learn more.
long story short, that's sort of how I do it in the beginning. And then if I like what they have to say, then I'll look into their deal a step further. And I typically try to underwrite the deals myself and just, so that's been a big learning curve. But I realized a lot of the sponsors I would talk to, they would say, hey, we've underwritten conservatively. And I was like, okay, what does that actually mean? Especially early on. I was like, I want to run the numbers on my own real quick, make sure that everything looks good. And about 85 to 90% of the time, they are underwritten conservatively. The rare instances that I would find would be like their vacancy rate they thought was going to be like 1%, where right now it's like 25%. And the pro forma are talking after 6 months. So like I thought that would be like a little high, just different things like that, where maybe they're doing 80% LTV, a variable rate, just things like that, where like that doesn't seem that conservative. So I'll look at like the loan terms, look at the interest rate. I typically want like a fixed rate, typically want like 60, probably not more than 70% LTV. So I look at those numbers, make sure that's good. And then once those numbers are good, then I'll go do a background check on them. And I forget the software I use because I haven't done it in a little while. I only do it like when I'm like ready to invest with someone. So I will run them through a background check. And it was about $30 to get it. And it was like a monthly subscription. So I paid the $30 and then canceled it at the end. And I'm just looking for things like making sure that they don't have like any recent bankruptcies, any tax liens, anything that would just be like a red flag. And when I'm doing this, I'll reach out to this operator and I'll be like, hey, I'm gonna run a background check on you. Anything that I should be like aware of, prior to me running it. And like one individual, he had gone through a divorce. So there's something about one of his properties that he was in the process of, being forced to sell, unfortunately. And, he had a tax lien on it, but it wasn't like a lot of money. But, it made sense because he explained to me and then I saw it once I went through and did the background check. So that's, pretty much what I'm looking at. And then from there, I mean, obviously I want to look at the returns. What's the, based on the projections, what am I going to get for like an equity multiple? What's the IRR? What's the preferred return? And then do they have like a waterfall structure? And then you even go into like the memorandum, I think it's the PPM, and go through there. Like, if they have a capital call, what is that going to look like? Do I have to participate? Are my shares going to be diluted? So there's a lot that I go into, but I just have that initial first call. And I just use my gut check. And to give you like an example, I talked to a guy, I don't know, about a week or two ago, and he showed up like 10 minutes late to the call. And, so for like right then and there, like, okay, I don't want to invest with this company. Just certain things like that. I've talked to other companies where, again, like, it just sounded like it sounded too good to be true. And if it sounds too good to be true, I'm not going to invest with you. I find that I like to be more of I say conservative. So like, I know some of the deals earlier, like a triple net lease and mortgage, looking 7 to 10% paid annually, nothing like too special. On the self storage development deal, looking for about 2x equity multiple, 5 years, 15 to 18% IRR, taking on greater risk, but I'm not trying to like look at a deal, get 5x my money in 5 years. I put in 50K and expect to get 250K back, and then say get like a 40% IRR. And not to say that those deals aren't possible, they just scare me a little bit too much. Maybe they're more of a class C property, you're trying to bring it to class A, or it's a total like neighborhood development deal and different things like that. I like this self-storage development deal because they pretty much already had units on, they already had like units built that were pre-existing, but there was mom and pop owner. They hadn't raised unit rent in about 10 years. And then so like right then and there, I'm like, okay, well, all they got to do is go in, add some technology, raise the rents a little bit. And I think they've already like doubled the rents that they were doing, which was nice. And then it was the development deal aspect of it is there was a lot of land on the self-storage property that just never developed into more units. So the plan behind this is you could think about your outside units, maybe you drive by them on the road, and then what they were going to do is build a enclosed unit, so more like climate controlled unit. And I like that aspect of it. The demand in the area looked like it was there, and it was actually a fun model. So there was two different properties. I believe one was in Delaware, one was in Indiana. I like investing more your conservative states. I don't know if you could consider Delaware. I don't know which way. I know it's a small state, but I know Indiana typically a little bit more red than blue. So I like to go in more of your conservative states, just regulations and not as much blue tape. I'm in New York. I would never invest here. There's too much that goes on. So I look at that. But yeah, that's really what caught my eye on the deal. And it's interesting because these other deals are cash flow play. Where this deal I invested in February 2023, but I knew going in I wasn't going to get any distributions for a while until like the project is fully developed. So I'll, based on everything, I should get a distribution in January 2025 will be my first one. So it'll almost be about 2 years, but in year three, they're projecting what it should be is be return of principal once they go through and they refinance the property in year three. So, it would be nice to get that return of principal back. Still going to get that that monthly distribution with getting my principal, and then I know I can take that principal and invest in another deal. So from that aspect of it, totally different. Not getting any cash flow on it, but again, it's probably going to be a 2x, 2.25x equity multiple over 5 years, which is why I really liked it.
So Trevor, when you're, you went from pretty consistent cash flow and to no cash flow for a couple of years. When you're looking at that, does a investment like that, does it have a preferred return attached to it, or is it strictly, you're looking at IRR and equity multiple?
Yeah, so the preferred return, so I believe it was like 8%. I think the majority of the ones that I'm looking at, 8%, majority like 80/20, LP to GP, and then depending on, once you get to like 10%, then maybe it's like 70/30. It's more like a waterfall structure, and then you get to like 12%, maybe it's 60/40. And I'm not sure if those are the exact numbers, but it had some sort of waterfall structure like that built in place. But yeah, typically I'm looking at 8% preferred equity on the deals. There's one deal I came across in not self-storage development, but it was 7%. But it was interesting. This gentleman, he used the model where he buys the properties all cash. So there's not a whole lot of risk. That's why your returns are obviously going to be lower. There's no leverage on a deal when you're going, you're buying, it was a commercial, it was industrial property and different things like that. But yeah, typically looking to just get 8% pref and then like an 80/20 split. I know that they got to make their return at the end of the day. And again, I really don't mind paying like acquisition management fees and different things like that. I mean, if you're hitting your numbers, you deserve to get paid at the end of the day. And again, I feel like I'm pretty thorough in investing in these deals because I don't like to lose money. And some folks lost money in the last year or so with some of these operators. And it really, for me, it was just doing my due diligence. And I think I'm a part of a community. It's called the Left Field Investors. So it's a group, and all of us are pretty much passive investors. And I don't know, there's got to be like 250, 500, maybe even 1,000 people in the group. So you hear of all the things that go wrong with people investing in deals. And not that it happens all the time, but it's just taking the assumptions of the sponsor, for granted, like what they put for their numbers. Okay, could they actually achieve these rents? Like as an example, in the self-storage development deal, and again, it's been over a year, so I can't remember the exact number, but let's say they're renting a unit for, we're severely under market, so say $50 a unit, and they want to bump it up to $100 a unit. Well, are the other self-storage facilities in the area also getting $100 a unit, or are they getting $75 a unit? What are they projecting? And then same thing if you're looking at multifamily, if you're projecting rents to be $2,000 a month, what are the other, obviously if it's class A, it's going to be more than that, or maybe it's a class B property, and what are the other class B properties? What are they getting? I typically wouldn't want to invest in class C, but that, I just want to make sure like their numbers are good and they make sense with what I'm looking at. I never want to just take an assumption, when investing in any one deal.
And do you remember what the, I guess, purchase price plus development costs were for this deal? When, because you said that there was a development opportunity, obviously some value add with the existing building, but do you remember what the purchase price and
Yeah, I
construction cost
think it wasn't too expensive. I think it was maybe $1.5 million, and then it was going to be about probably another 500K in construction costs. And I can't remember, what they projected out from there just 'cause it's been a long time. But yeah, it really wasn't too expensive. I mean, I don't know what people consider, but for the two properties, I mean, they were about, one had more units, so it was maybe more of $1 million property. And this other one was a $500,000 property or whatever that number maybe. But yeah, they weren't like, so super expensive. And I will say, not that I do it all the time, but I was early on in my investing career, and the sponsor had like a 50K minimum to get into the deal, and I didn't want to put into 25K into the deal. So what I had done is, and not that I tell everyone to do this, but something that worked for me is I said, hey, can I get into this deal for 25K? And it was like in September, and they were like, "Oh, we're still bringing on investors. Our minimum's 50K." So I was like, "You know what? Yeah, it's fine. I'll go find another deal." I kept seeing the emails on it. I'm like, "Oh, I really want to get into this deal, but I don't want to write off a chunk of 50K." And then I saw that they were closing the deal. And it was like in February, sometime in February, obviously. I went to them with like 2 or 3 days left. Hey, can I invest 25K into this deal? And was able to get into it, with a few days left in the deal. And that was a strategy that I use. And not that I would want to use it all the time, but when I was first getting started, I was still very conservative. Now I wouldn't. Now I kind of wish I put 50K into the deal and just like and wrote it out. But early on, I think as an LP, everyone's kind of you can be a little bit timid. I find no one I know invests in real estate. I'm the only one out of my family and friends. Everyone's pretty much 401k and IRAs. So I don't have really anyone to go to outside of like the LFI community. So I was like, okay, I want to do this, but I don't want to like throw all my eggs into one basket. I just want to test it out and see how it goes.
And so where do you see yourself going? Obviously you've been involved with a handful of different asset classes now on the LP side. Where do you see yourself going in the next 12, 24 months with your investing?
Yeah, I think for me, I probably want to do more cash flow. I do like this deal, but I find that looking back now, where I feel very confident in the operator, the people that are putting the deal together. But I feel like for me, I'd rather just do a pure cash flow play, going forward. More of your triple net lease opportunities. I made a good investment in the mortgage note fund. I re-upped my investment again. Actually, it was back in February again, nonetheless. But I think I just like the more of the cash flow plays, trying to just get anywhere from 8 to 10% annual paid out. I like monthly if I could do quarterly, but for me, I was going through like my goal plan and I said, okay, if I get for every deal I say invest 25,000 at 8%, and if the deal doubles hypothetically over 7 years, very, pretty conservative there, then I could have financial freedom within 7 to 10 years. So I was just looking at that where maybe I do want to sprinkle in some of, more of these development deals, but I think I just got gun shy in the last year with a lot of these multifamily operators, these heavy value add deals where, they, like I mentioned, they had that 80% LTV, they had a variable rate and, things just didn't work out for them. So I think I'm just more gun shy and I think I'm, more conservative now because of it. But again, if this self storage development deal goes the way it's planned, who knows? I'd probably re-up my investment with them. But yeah, that's sort of what I'm looking at. Just looking to get more just pure cash flow, with a little bit probably appreciation on the upside, where you get like that triple net lease, where you get the built-in rent increases. The ones I'm looking at are more your corporate grade A tenants. So you're thinking like your AutoZone, your Family Dollar, Dollar General, even like vet offices. It's crazy how many vet offices are owned by corporations. You'd think like your local mom and pop vet office is just like local, and you realize like it's not. It seems local, but it's actually owned by a corporation. So there's these different buildings out there. I think the wildest one I've seen was a guy offloading a portfolio. It was actually in my area of post office buildings. So the post office was running through it. That one would scare me just because I don't know if the government's always going to be, delivering mail 5 days or 6 days a week, depending on where you are. But I thought that was an interesting portfolio. So I think that's the area. And then maybe multifamily as well, depending on how the market does here in like the next 6 to 12 months or so.
And going back to kind of your bread and butter, how are you coming across? So I've had someone before on the show that talked about note investing, and that was kind of his only thing. You've mentioned it a couple of times now. I couldn't tell you the first thing about finding notes to invest in, and I know we're talking about the self storage deal, but my curiosity is kicking in. How do you come across notes to invest in?
Yeah, so for the notes, so I actually just invest in a fund model. So I pay someone so that way I was like, oh, I could probably take a boot camp and find the notes on my own. And I was like, no, I'm just gonna pay someone to do it. So like the deal, it's I think I put in 25K into the deal. Again, no like appreciation. Then money's locked up for 4 years, and then you could get your return of principal back. You could get it earlier than that, but you have to pay like some sort of penalty, which makes sense. I mean, most real estate deals are going to be illiquid, but it pays about 9.2% annually paid out monthly. So, and that's why I like it. And it's very similar to a lot of these notes. They're buying mortgages where 40 to 60 cents on the dollar. A lot of the times, let's say you had a mortgage and the payment was 2,000 a month. and you had a 5% interest rate and you just couldn't afford it, they'll come through, they'll say, hey, we'll give you a $1,500 a month mortgage at a 10% interest rate. So we'll lower the monthly payment, but you're just gonna have to pay more interest because of that. And that's sort of how their model works. They keep people in their homes, but they gotta make their money. And it's kind of like a hard money lender. You can't get traditional financing at the bank. These are people that have not paid their mortgages for a year. So just to get them, so you're trying to reduce the monthly payment, but then obviously you have to make your money on the interest there. So I like that aspect of it. And that one's been great. Consistent distributions, first of the month, no problems. I mean, you can't get much better than that. All the sponsors I've been invested with, been very consistent, no capital calls, anything like that. So I feel fairly lucky in that sense where, hopefully trying to avoid as many capital calls as I can.
Awesome. Did I miss talking about anything that you wanted to chat about today?
No, I think that's perfect.
Where can people connect with you?
Sure. So they can connect with me on LinkedIn. That's going to be my name, Trevor Oldham. And then if they want to check out our company, that's just PodcastingYou.com and just PodcastingYou.com.
Awesome. Trevor, thank you so much for sharing about your limited partner investing career. I'm excited to see how this self-storage deal ends up for you. I'm sure it'll be great, and hear more from you as your journey continues.
Thank you.
Thank you for listening to this episode of the Real Estate Professionals Investing Podcast on WIN, your community of investing knowledge for growth. We hope that this episode has increased your knowledge and added value to your path to freedom. If you would, please take a second to rate us so that we can get more great investors to interview. If you or someone that you know wants to be on, please visit westsideinvestors.com and fill out our form to be on the show. Thank you again and enjoy your day.